What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 15th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to talk about one of the biggest macro events we've had over the past couple of months that is going to determine the direction of asset prices in the long term, and what has already sent a lot of warning signals across some of our major macro indicators. In today's video, I'm going to be talking about the biggest inflation reading in over 8 months, a huge uptick in the overall inflation rate on an annualized basis. So we're going to go ahead, talk about these indicators we're tracking, talk about this inflation, and why overall it's got us very concerned about the direction of asset prices. We've got a lot of things to dive into in today's video. If you guys like this video, if you enjoy the rambling, consider dropping a like, and let's go ahead and jump right into it. Okay, so I want to go ahead and start off by doing a little bit of Bitcoin price analysis here. While the overall amount of this video will be generally a bit not so much negative at the end of the day, just trying to be as realistic as possible. The key thing is that Bitcoin's price is definitely showing some of the signs of optimism that we'd want to see. We have seen a nice broader uptrend here from down here towards the $17,000 range up here towards 24K. We've come back down with a sell-off holding on the 200-day EMA. Again, holding on those momentum-based moving averages, especially the 200-day, and attempting to potentially turn what was previous resistance here back in November, as well as January, and back here during September into new support. So again, this is the secondary step you'd want to see in a full-scale trend reversal. And then next, it's going to be about whether or not it can get above that 200-week moving average. Whether or not it does this or not, the key thing I want to focus on is whether or not this trend will be sustained. Will we be able to, once we get above that 200-week, turn that into new support right around where we actually had closed our position? So for us, we're in a great position because we sold during the relief rally back in August. We are not FOMOing in. There's no reason to FOMO in at this moment. And we need to see further confirmation that the Fed has done its job. We are going to have a quote unquote soft landing, as the market participants are betting on right now, buying into Bitcoin, buying into stocks, you name it. Now, I want to go ahead and talk about why I don't believe in the soft landing narrative. A lot of people are chasing this because of the way they've been trading for the last decade. And they got rewarded for trading more aggressively, more risk on over the last decade. The problem is the vast majority of investors and traders don't know how to survive during bear markets. They don't know how to survive during the inflationary periods because they don't know how long inflation can last. So let's go ahead and talk about that. Again, one of the key signs that I want you guys to be aware of that I think signals a kind of silent risk-off mentality is how long Ethereum has been in this distribution pattern, sitting sideways, not making new highs against Bitcoin, and ever since back here in December, since the start of the new year, has actually been making lower moves month over month, getting resistance at that 200-day and signaling that it's likely coming down to the 200-week. I think that is a very likely scenario. It's a bare minimum scenario, I think, for Ethereum. And it doesn't exactly mean that the dollar value is going to drop that specific amount, but it at least means that it's not going to be outpacing Bitcoin. So if you are going to be making long bets, stick to Bitcoin and or at least wait for Ethereum to come down to those lower ETH to BTC ratios. Now I want to go ahead and talk a little bit about the CPI report. I know you guys are probably not ecstatic to hear more about inflation data. Trust me, as much as I want to talk about some other exciting things out there, I definitely want to spend some time, if you guys are interested, on doing a video on ChatGPT, what kind of ramifications things like this technology may have. I want to go ahead and emphasize why this month's inflation reading was huge for determining the direction of where the Fed is going. On a year-over-year basis, the overall CPI number, the Consumer Price Index, dropped from 6.45% in December of 2022 to 6.41%. So a lot of people are saying, hey, this is great. We're stepping in the right direction. Inflation is still declining. But that's a move of 0.04%. Now, some people will say this was in line with analyst expectations, that this was well planned for, and a good sign still, either way, that we are going to be able to either keep inflation where it is or move down month over month. And that may be true to some degree. But I want you guys to know something. If we get months like this, it is going to be further proof, like it was back during the fall of 2022, that there is a clear sign that inflation is sticky and it takes a lot longer than most people think. And here's what we got to consider. If it's going to take, in order for the Fed to reach its 2% target of inflation, if it's going to take 6 months, 12 months, 18 months, going off of those 6-month intervals as kind of a broad estimate, we need to understand if it's going to be 6 months, 12 months, or 18 months at the current pace of things. Because interest rates being at 5%, all right, the federal funds rate being around that 5% target, or maybe even higher, as the Fed may continue to increase by 25 basis points or more on a given FOMC meeting, right? The longer those rates hold up there, the more likely you are to have a major recession in the economy. We're already starting to see some of those deflationary signs, which are coming from lower amounts of demand versus the supply, and that's what's helped contribute against some of the inflation, at least the reduction in inflation. But the key thing I want to talk about here is we go, rather than looking at the year-to-year metrics or year-over-year metrics, I want to take a look at the month-over-month metrics. Folks, we have just had the biggest reading since June of 2022. The biggest reading in over 7 months for the CPI. So when you hear people saying, oh, the Fed's just going to engage in a soft landing, inflation is over, it's okay for the labor market to be red hot with practically twice the amount of jobs it had back a decade ago. It's totally fine for, car prices within a month to just go absolutely parabolic as financial conditions have eased. And the housing market, it'll work itself out, all right? We've been talking about this stuff for months here on the channel. We've really been hitting on it over the past few weeks as we started to see the early stage signs in commodity prices and the dollar index and the U.S. 2-year yield, which is very good at tracking the predictable moves in the federal funds rate. And more specifically, the signs we've started to see that the housing market is still highly elevated, that the labor market is still highly elevated and overheated. And until those things start to cool down, there is going to be an imbalance between supply and demand. Now, why is it that inflation rebounded 0.5% here, right? People might be wondering, and I think that's actually a very fair question. Why is it that inflation, just after going down, towards just an inflation rate of 0.13% the prior month, 0.2% or 0.49%, right? We were seeing a clear decline here going into Q4 of 2022. Why is there a reversal? The reversal has to come from excess money. It has to come from excess demand versus supply. And where does that excess demand come from? Where did people start magically getting more money to go out and buy things in the economy that spruced up prices in January? Well, look no further than the stock market. Equities, since back in October, have moved up on average. If we use the Vanguard Total Stock Market ETF, or VTI, we've moved up from around a value of $175 per share up to $207. And if you look at a lot of the crazy COVID stocks such as Carvana, trying to think of the other ones, the Peloton, a lot of companies that are bankrupt and mainly held by retail traders at this point, they started to make astronomical gains during this period of time, still far down from the previous highs and where most people bought it. But I digress here. The key thing is that people have been making speculative returns on their long positions that they've been holding, starting to sell those off and utilize that money in the real economy. The easing of financial conditions are what is sprucing up inflation, right? Again, as we've talked about here in the channel, we wrote about within the Dash report this month, if you guys want to get a more kind of detailed analysis of this. As financial conditions ease, it is going to allow for people to sell equities and therefore spend that money in the economy. If you, for example, think about 1,000 traders who have a combined portfolio of $1 million versus, say, someone who is one single investor and has $1 million, right? If they double their money from 1 million to 2 million, those 1,000 people are going to have much more of an impact on inflation, negative impact, by continuing to buy goods and services in the economy that generally they wouldn't have bought before because of the returns, versus someone who had $1 million and goes to 2 million. They're one individual. They don't have much of an impact on inflation. Them increasing their wealth over time doesn't have the same inflationary pressure as a lot of retail speculators. This is why, especially during 2020 and 2021, with the excess amount of money that was in the system, the excess returns that people made from all that COVID stimulus, essentially had a lot more demand coming into the economy versus supply. Is the only reason why over the last decade, even with all the QE that central banks have put into the economy, there was never an ability for the Fed to really meet even to their 2% inflation target. It always was sitting right below that range, maybe popped up a little bit higher for a short period of time, but the Fed was never able to really get inflation above that range, even by printing a lot of money. It only happened when that money got into the hand of retail speculators to wide extents without having the actual supply to actually meet that demand in the economy. You have less people who are going back to the workforce now. You have a lot of job openings. And because of that, it's a very strong market for labor participants. And while I definitely love having more negotiation power for the end consumer, that is going to come with inflationary pressures if we do not fix the supply chain issues we have, if we do not have more people returning to work to meet to that demand. Simply put, the cost of goods and services are going to go higher. It is basic economics here. And as easing financial conditions continue to play out like they are still here today, we are still holding up relatively where we were back at the end of January. In February, I can bet you money you're going to see a higher print in the CPI month over month. And it is going to showcase to all the people who have yet again bet on the easing of the federal funds rate, right? The idea that the Fed is going to start lowering the federal funds rate somehow and stop reducing its balance sheet, that they probably got another thing coming to them. I'm just trying to be realistic with you guys. I have no incentive here, unlike a lot of other YouTubers who go out there, and we'll promote referral links. We'll try to get you guys to speculate enormously within crypto. I have no benefit to be negative here in the channel, guys. In fact, I would love if there was another bull market tomorrow. But my job here is to try to get the market right, to show you guys that there are warning signs. There has been, for the past 2 weeks, a blue flip here on one of our key momentum indicators that is tracking the dollar index, signaling that the dollar is gaining strength. It is building a new foundation here, and it's likely going to be moving in towards the 105 point range here, as the dollar continues to signal signs that the Fed is going to tighten more aggressively than people previously thought. Outside of that as well, we've also got the US 2-year yield at its highest level since November 10th. Folks, these are the kind of signs you need to be watching. I don't care what Bitcoin's price is doing. I don't care what the FANG stocks are really doing at this point. What I care about here is what the bond market is telling me, what foreign exchange markets or Forex markets are teaching me, and essentially, what is the Fed going to do? Is inflation here? Because so long as I know the metrics of inflation, so long as I know that inflation is sticky and that it's not going to be reaching its 2% target in the next 6 months, but more likely in the next 12 months to 18 months, then you can toss that soft landing part of the conversation out the window. Plain and simple. The Fed has one mandate, and that is to get inflation down to 2%. People who think that the Fed can just go for 3%, they're going to manipulate the metrics. Folks, that kind of mindset is exactly what's going to lead to the 1970s. That's what's going to lead towards additional waves of inflation, because it proves one thing, which is that people got too used to the good times, getting rich for no additional output or productivity, simply just making money in asset markets. And that means we've got a long way to go. Still too much excess money in the system. And as we wrote about in this month's Dash Report, we talk about how the Fed leans in to this short-term optimism. It is a liquidity trap, the likes of which we have not seen in more than a decade, potentially multiple decades. Considering all the excess money in the system, we are still at more than 2 times the base money supply we were back in 2019. And we think the job is done. I don't think so. I gotta be honest with you guys. And if you guys like this kind of honest rambling, I ask if you could just drop a like. It's a great way to get this message out there. We need more people to hear this. We're not trying to be negative, we're trying to be realistic. And we're entering into a consistent range of previous support that is now turned into resistance. This is the period of time where a lot of people are going to get suckered in to this relief rally, or what is likely a relief rally here. As we've crossed through the 200-day, a lot of people getting optimistic. As we come up into this range, there's likely to be met with some form of resistance. Now, I want to go ahead though and talk about one key optimistic thing. Even though we do believe the market is going to continue correcting here over the next couple of months, that we are far out of the woods from reaching an absolute low, both in crypto markets, but also in equities, I think that there's still a lot of optimism within the market when it comes to the builders, the people who are building really exciting projects that are going to change the way we do things within the crypto industry as well as equities. And one of those projects that I've been continuing to work with for a long period of time, and I'm a proud ambassador of, is AngelBlock. Now, if you guys haven't heard of AngelBlock just yet, they're one of our long-term partners here on the channel, and they're focused on building a service that allows for quality projects to offer not only the degrees of transparency of what they want to build, how much they need to raise, and how they're going to deliver on specific items in order to receive those tranches of capital, but on top of that is going to bring about some of the best deal flow, in my opinion, within the crypto space. So if you aren't paying attention to AngelBlock, I think you guys are missing out on a really exciting protocol within the crypto space. Their goal is to not only democratize allowing access towards funding rounds, similar to traditional launch pads, but more importantly, rather than just being a normal launch pad, they utilize a lot of technologies like tranches in order to guarantee that projects have to deliver on specific goals in order to receive that capital, allowing investors to have the weight and power rather than putting all the trust in an individual team before we even see any real delivery on those promises. Now, one of the big things about AngelBlock that I want to spend some time to talk about is the upcoming IDO. Not only is AngelBlock going to be engaging its token generation event later on today, a moment that has been in the making for a long period of time, but on top of that, they're going to be having their IDO, which launches on Uniswap, where you'll be able to get your hands on Thol tokens, the native utility and governance token for the AngelBlock ecosystem. Now, again, I want you guys to definitely do your own research if you're interested in learning more about the Thol token before making any action. But the big thing for me is what AngelBlock is really building. I'm really excited in the kind of deal flow that AngelBlock is going to bring, from projects like Delta Prime to also a lot of projects within the Aleph Zero ecosystem, one of the few layer ones alongside Radix that I'm really excited about going forward into the next coming months and the next year. If there is going to be a bull market here within the near future, I'm definitely eyeing these plays, and more specifically the kind of projects that are going to be deploying within the AngelBlock ecosystem. And the reason why I'm so bullish on AngelBlock as a protocol is because of this tranche mechanism, the governance that investors get to participate in, and overall the quality filters that AngelBlock offers versus all the traditional dime a dozen launch pads and different types of investment vehicles within the crypto space. I'm very excited to see more people participating in early stage fundraising, allowing them to capture those opportunities well before they get all the major exchange listings. But on top of that as well, to see real quality projects have long-term incentives to not only raise the capital they need to deliver on their promises, but actually meet to them throughout the process. So if you guys are interested, check out the link down below in the description where you guys can find more information. And I highly recommend you guys go to their website and click on the Twitter icon, and make sure to follow AngelBlock for more details on Thol as well as protocol updates. Anyways, that's it for today's video, everyone. Again, if you enjoyed this video, consider dropping a like, consider subscribing if you haven't already, if you enjoyed the rambling. And until the next video, I'll see you all in the next one. Take care, everyone.